just the 200-day moving average in general. And really, to me, the next stop here is going to be 325 to 330 area. So a really solid 30-point move is in play on Tesla. I would be a lot more inclined to be taking this trade if we didn't have earnings this week, right? So tomorrow we have a lot of earnings after the bell. Thursday we have a lot of earnings after the bell. So I feel like there's not going to be a lot of volume in Tesla until after these earnings happen. But if these earnings come out, they're good, right? Apple, Microsoft, Google, whatever. If these earnings are good and it rips the market up, Tesla's just going to gap up into this area, and it's just going to make it a little tricky. So ideally, we can catch a nice scalp tomorrow morning, and ideally we don't get pulled too high up in the air past 300 if the other earnings are good. If the earnings are bad and this pulls back, well, then our level here at 300 is still going to be in play. So that's kind of my thoughts on that. Are there any questions there? Well, good. I guess that means you guys all understand that just perfectly. So, again, this is a free lesson, so I don't come prepared with any material. I am here to answer anything you guys have. I want to make sure that y'all know anything. You could ask about the chat. You could ask about a certain trade. You can ask about a certain ticker. You can ask me anything personally. There is, everything is in play here. So, this is a free lesson, so I'm not going to put a ton of effort into bringing material for you guys. That's for my coaching streams and stuff. So I got to make it worth their while. So get what you can out of this. I do this once a week. This is where you become a good trader here. I'm telling you. What is a normal size position for me? So, when I get asked this question, it's a little more complicated than that, right? Because it does depend on the trade, the market environment. But let's just, for example here, if I have a perfect market environment and I have a perfect setup, I'll buy in with anywhere from 10 to 20 grand. If I have just kind of normal everyday, whatever, I could be as small as 1,000, or $2,000, right? Sometimes even less. If I'm just kind of looking to pick up a little scalp, it's not an A+ setup. I'm not willing to lose any money on it, whatever. But in like scenarios like tomorrow, right? If Tesla sets up good, we do have some earnings, but it's not a typical A+ market environment. I may go anywhere from maybe around $5,000. If I can make 20% on 5 grand, it's $1,000, right? So I'm not looking for anything too crazy. If we want around 325 as a target, same week expiration seems risky. Yes, I think it would be more of a swing. Yeah, so Chris, when I talk about 325, I'm just talking about like it could get there in a day, it could get there in 2 days, maybe 3 days, or maybe it doesn't get there at all, right? So I just know like that's the kind of room that this has. That's the kind of move that this could make if everything works perfectly. And like I said, this week's a little bit tricky because of all the earnings. So I'm still going to be looking for my like 5 to, at most like a 10-point move for the day trade. I could swing trade it, but then again, IV is up on a lot of things because of the earnings this week, like I keep mentioning. So I don't really want to swing trade it, right? Because after the earnings, IV is going to crush. And, if Tesla's down, especially those contracts are not only going to lose value because they went against me, but they're going to lose value because the IV is going to go down. So typically in a scenario like this, I would be swing trading. But again, like the earnings side of this week is what's screwing the timing up for me. So, I'm going to be looking to catch my day trades, 295, 300. But, if we get a huge mover like we did on last Friday, I'm going to, I'll just sit there and scalp it. I may take 4 or 5 trades on it, right? Which typically I don't even take that much in a week, but I don't want to be holding something, I don't know. There's just so many different kind of scenarios. I hope that makes sense that even though, like I said, I do think it gets 325, It may take 2-3 days. Again, not super comfortable swinging right now because it's weak and all that. So, Shin, when you are stopping out of play, do you set a stop loss? Stop loss set, or do you mental stop loss? Is your stop loss based on percentage down or price movement? It's kind of both, honestly. So if I'm like swing trading, I may use a hard like percent. I may use like a stop loss that I set, right? I set like the order. But typically when I'm trading day to day, I'm paying attention to percentage. But if I am gonna get out solely based on percentage, right? Like solely based on 10% with the amount of money that I'm in, to me that does more harm than good. Simply because if you would have had a 11% stop loss and not a 10% stop loss, you could have stayed in the trade. So my rule of thumb and just kind of my way of thinking when it comes to stop losses and stuff like that is the market doesn't care about how much money you're up or down. It doesn't care about your position size, doesn't care about your average price, doesn't care about anything, right? The market's going to do whatever the market wants to do. So I want to make a stop loss decision based on what the market is doing, right? Of course, I don't want to have 30% losers and 10% winners, right? So I size myself to a point where I know that I'm okay with losing 10 or 15% or even 20% at most, right? So I'm not really going to be super mad at how much I'm up or down or how much I'm down for this example if I lose anywhere from 10 to 20% just because of my sizing. And the reason I do that, guys, is because let's be honest, the way that I trade is really it's kind of chaotic, right? It's very volatile. You're seeing 10 to 20% movements in your P&L pretty quickly at times. So I don't want to get freaked out by the P&L. So I rather be a little bit smaller sized and have a really solid win rate because I can, give it a little bit more room. If I'm ever in a scenario where I'm like focusing way too much on the P&L and the percentage I'm up or down, that instantly tells me that I am sized too heavily because I am too attached to the P&L and I'm not attached to what the stock is doing, right? So, typically to kind of wrap up that answer there, a lot of the time it's going to be based on price action and what the stock is doing. But I also have a general idea of how much I'm going to be up or down if the stock gets to an area where I think I should be stopping out. Does that make sense, Shin? It's more so mental stops, but it took me a long time to get to the point where I can mentally stop myself out, right? I'm sure some of you listening may have this problem, but when I first was starting for the first 2, 3, 4 years even, I would find myself in one trade, maybe one trade a month or one trade a year, a week even, where I would do really, really good. And then it's that one trade that I just don't follow my stop loss and I hold it and average down and then take a really big loss. And I would do things like set alerts on my on Thinkorswim. You can set alerts and it does like this dinging sound. So I would put my headphones on, I'd turn the volume up all the way up, and I would put my alerts where I need to stop out. That helped. I would also put a huge red line on my screen. You guys see these white lines on my screen. Imagine a big red one, exactly where I need to stop out. So not only do I have the dinging sound in my ear, I have the red line that if it crosses that, I need to get out. And if I couldn't, and basically what I told myself is if you can't stop out of a trade with a dinging sound in your ear and a huge red line on your chart, then you are not meant to be a trader. That's the long and the short of it. So I had to do stuff like that to kind of train myself, like, dude, just take the stop loss and save yourself from a big loss. Because you know how to win, you can win plenty. If you can't learn how to lose the right way and you can't just accept that you're not going to be right every time, and a lot of it is ego and emotion and whatever, a lot of it's going to, if you just follow the plan, it's simple, right? It's just like you accept loss before you get in. If I lose, I lose. Another trade's going to come. Another day is going to come. Another week, another month, another year, right? Tesla's going to have another big breakout. But it's you can also look at that vice versa, right? If you miss an entry and the stock runs a ton, right? and you chase it and then lose. It's it's the same thing as a stop loss, right? You got to keep yourself from breaking those rules of chasing into a move that you missed, right? Even if you just don't get filled, right? You tried to buy, you didn't get filled, it rips way above you. And then, the last thing you want to do is chase it when your contract's already up, 20, 30%. And then you end up, taking a loss on it, right? So you can look at it on both sides. Roland, it just takes a lot of time, to be honest with you. I mean, I remember waking up and before market open, I'd be nervous and butterflies in my stomach and, whatever. And over time, you just get used to it. You're just like, there's always tomorrow. There's always that next trade. So why make things so intense and so nerve wracking when if you miss a trade, you miss a trade. If you get in and your trade goes red and you just follow your stop loss, great. I had a really cool lesson the other day when it talked about the unprofitable trader and what do they love and what should they be focusing on. And a lot of unprofitable traders, they get that dopamine rush, they get that love for trading based on being green and kind of like the gambling aspect of it, right? And they get really sad when they lose and really happy when they win. And then another kind of unprofitable trader is someone who just thinks that they should just read and watch every video and just, the more knowledge you take in, the better trader you're going to be. And that's just not the case either. Obviously, you need to have knowledge, right? But just because you read a trading book doesn't mean that you're going to be able to show up and execute the markets how a professional trader would, right? What the profitable trader does is he doesn't get dopamine from being right or being wrong. He doesn't get dopamine from reading a news article and thinking he found the next 10,000% mover. He gets like the dopamine from trading and the love for this when he follows his process, right? So he is not overly joyed and he is never overly sad. He is content and he is, you could even say that he is happy when he follows his plan, whether it's win or lose, right? If he stuck to his plan, he stopped out and that stock went way lower and he would have lost way more money. He's happy because he followed his plan and he did exactly what he needed to do. He's also happy whenever the stock went in his favor and hit both of his targets perfectly and he got out, right? Does that make sense? So, I think back to you, Roland, I think a lot of it does take time, but I think it'll be a lot easier on you when you simply just have a plan and have a system. And I know as a new trader, it's kind of hard for you to make that trade idea, make that trade plan and, be confident in what you're thinking and feeling and doing. But at the end of the day, it's so much better for you to go in and even something as simple as I'm going to stop out if I'm down 10% and I'm going to take profits if I'm up 20%, right? Even if it's that simple and you can just follow that, well, that means that if you can just put yourself on a few winners, your winners will be double your losses, right? No matter what you did. Even if you just blindly came in and bought a random stock in a random contract, knowing nothing, but you were disciplined enough to lose 10% and win 20%, then you'd probably do 99% better than someone who comes in here with all the moving averages and all the, all the ego and the emotions. And, I read this in a book and I'm going to buy it because the EMA crosses the SMA and the MACD and the RSI and blah, blah, blah. You're going to do a lot better when it's just a simple target and stop loss than someone who does it, the complicated way. Does that make sense? It's a good question, though. A lot of people that I see struggling recently, they're just, they're I feel like the way they enter the trade and their thesis on the trade makes somewhat sense, but they will go into the trade for it to be a scalp or a quick day trade, and then they'll blindly hold it and turn it into a swing trade, right? Because they're down, more money than they were prepared for because they've sized wrong to start off with, and then they didn't have a stop loss in mind because all they can think about is winning. They're not focused on losing at all. and then they end up holding this trade for hours and hours and hours and staring at it and stressing about it. And then they hold it for, the next day, and maybe they sell it off the open the next day for a loss. And then, oh man, if I would have just held on to it, I could have made this much. I could have done that. I could have done that. I should have averaged in, right? It's just like, if you're constantly looking at things that you could have done based on where the stock is now, you're never gonna, get better. Okay. You have to focus more so on making this a system, and make everything you do like just follow your process. And this becomes so much easier and less stressful if you just narrow it down and make it as simple as possible. It really is. Yeah, I've done it plenty of times too. That's weird for me. I do great and follow my plan with paper trading, do phenomenal, but with real trading, I get anxiety. Yeah, well, that's the jump, and that's one thing that I think sucks about paper trading. And to be honest with you, I never paper traded, right? And I think that was a good thing in the fact that I never had to train my mind from going from fake money to real money. But obviously, I lost real money in the beginning because I was a kid, and I didn't know like what to do at all. And yeah, not to mention, like, when I say kid, I mean 15. Um, so I mean, I get it, and it's real, Roland. Like, that is a real thing. And my advice for you is, what are you doing right on the paper side, and what are you doing wrong on the real side? And if it's simply emotions, well, then you need to go back to paper trading, and you need to make your paper trade account the exact same amount of money you have on the real side, and just try to just trick yourself into believing that it's real money. Okay. And then if you do that, I think that you could go over to the real side and again just try to block it out, right? It's just another trade. I would hope that you're not using like a life savings account or something. And you can go from there. What do you think? What else? I mean, this is a great time for y'all to talk about anything you're struggling with here in the market, guys. I mean, you're never going to get better if you never talk about things that you're doing wrong and you only talk about things you're doing right. This is a game of fixing mistakes, especially in the beginning. And that my job is to help you with that, but I can't know what you're going through if you don't tell me. And you shouldn't be embarrassed, you shouldn't feel judged, you shouldn't feel anything like that. Yeah, no, I mean, I get it, Roland. But again, it's like, whether it's paper or whether it's real, if you have the exact same system and process in place, you're going to get probably the same outcomes, or roughly the same. Okay. Um, you shouldn't be having a 10% stop loss on paper and then a 25% stop loss on real money. And I get it. It is tough to kind of move. What's up, Vogel? I get it that it's tough going from paper to real money, right? I mean, just psychologically, it's hard. But again, having that process in place should really help with that. And if you need help with kind of wrapping your head around what that process should be, I'm happy to do that with you. I want nothing more than to see you guys succeed. I mean, I hope you know that. Yeah, sure thing. YouTube and X, you guys can ask questions as well. I can see it. Yeah, I did hear about that this morning. That was kind of crazy. I think last time you were here, we talked about Apple doing stuff in India. I don't know, but I mean, if that happens, that'll be insane. I was surprised the market didn't really react to it much today. Yeah. Canardo on YouTube, is this considered a downward trend? I don't know. I don't know what chart you're referring to. If there's one on my screen, I don't really see any downward trend. We opened the day around 285, dropped down to 280, and we closed the day at 290. But if you have a specific stock I'm going to look at, Canardo, I am happy to go over that for you. But yeah, no, I mean, I do think that there is some positives in me never paper trading, but there's also the negatives of losing real money when you have absolutely no clue what you're doing. There was just never that mental switch from paper to real. On your option trades, at least in live stream, do you typically use a stop loss and take profit? Yes. I mean, I always have a stop loss in mind and a take profit in mind, always. Everyone should have that. I know that's kind of a quick answer to your question, Alex, but yeah, I mean, I don't have a specific contract price that's going to be my stop loss, but I know kind of roughly what I'm looking to lose on the trade, and then I also want to really pay attention to how the stock is moving, right? Because at the end of the day, we just talked about that. Hang on, guys, 1 second. Okay, 1 second. Okay, sorry. Little brother wants to scream when he plays video games. Let's see, where were we? So yeah, I never have a specific dollar amount, right? I have a rough estimate on what I'm looking to lose or win. But at the end of the day, the stock is going to move if the stock wants to move. And no matter what I'm up or down is going to change where that stock's going to go, right? So that's why I don't want to base my stop loss or take profit solely on P&L ever. Let's see what else here. I've somehow managed to take out a lot of the emotional trading. My trick is not to think about making gains. My bank account but gains with percentage on the chart. It's awesome. It's great. Of course, you have it when I win, but I try to mute my emotions and shrug off a win the same way I shrug off a loss. Chris, I'm loving what I'm reading. It's important to register the reality of a trade and its impact on your wealth. But I found keeping my emotions as close to a baseline as possible, win or lose, allowed me to make really good trades. Chris, I want to screenshot that. That's so good. That is kind of where I want y'all's mindsets to be, right? No one cares that you won. No one cares that you lost, right? You could be as mad or as happy as you want to be, but it's not going to change the outcome. And I mean, the faster you get to the point where you have that process, you're following that process, you're following that system, no matter win or lose, right? It's not about winning a dollar amount or losing a dollar amount. It's about sticking to your plan, right? I won because I stuck to my plan. I lost and I stuck to my plan. That's it. When you get to that point, you're going to see that equity curve in your brokerage account have a perfect looking, move up, right? It's not going to go straight up. It's not going to go flat. It's not going to go straight down. It should be pretty gradual up. And then obviously it'll have an exponential growth. My weakness was letting the losers run and cutting the winners early. Cut my loss on Amazon this morning. Felt good. Now I need to learn to let winners win. Yeah. So, I mean, this morning's Amazon loss, obviously, guys, I don't want to lose money. And I don't want anyone else to lose money. But that's the reality of trading, right? You're going to lose. So if you could just stick to that plan, and I think that the loss we took was like a perfect loser. Shane, you're kind of answering your question, right? Or answering your statement. Well, if you let losers run, why wouldn't you let a winner run, right? And when you cut winners short, why wouldn't you cut losers short, right? That just means you're really focused on making or losing money, and you're not so much focused on like you're managing a risk and whatnot, right? So I love that you're um like reflecting on yourself and being open about what you see yourself doing wrong, because that's how you're going to get to the point where you can do this consistently much faster. Yeah, so you don't have a pre-stop loss to take profit before you enter. No, I do not. I do not have like a you know it, Alex, I'm not saying that I'm entering in blindly and then coming up with the stop loss and coming up with the take profit. I know that if I get in here, my stop loss should be around this area and my take profit's going to be around this area, and I would get in. I don't have a very like it's not like I hit buy and I already have a sell order above for my profit and I have a stop loss order in as well. I don't have any hard set orders. Um, for me, I did use it for equities, but now I haven't figured out how to use on options for Webull. Options are just a little bit trickier. That's the reason I don't do that. Or do you know what you want it to sell for downside, upside, and don't have it set? Okay, I should have read everything else. So yeah, I don't have hard set orders. Seems like that's what you're asking. I just mentally know if it breaks this, I need to be selling for a stop. If it breaks this, I need to be, that's where I'm looking to take profit, kind of thing. And then that's, talking about letting winners run. That's kind of why I like to scale out. I don't sell my entire position instantly. Obviously there's times where I will do that, but on winners, I will try to scale out so I can catch as much of the move as I can. And even then, sometimes I don't catch even half the move, but I would catch more than I do if I sold everything at once. Obviously, if I held my entire position and sold it at peak every single time, I would be making more money, but that is not realistic, right? No one knows where the top of the stock's going to be, and I'd rather just slowly kind of sell and take profits into a winning trade than trying to hold the entire thing as far as I can. Then it ends up reversing and I end up, breaking even or not nearly making as much as I should have. Right. Because that's what sucks and hurts the most, I feel like. There's a risk in my method because I try to act like it's a game and not money, almost like my real account is a paper account. Well, that's great, Chris. At the end of the day, it's numbers on a screen. It's numbers on a screen. It's a market moving. Everyone's, it's, like a free for all kind of game where as much as we are a team, everyone has to click the buy and sell button on their own. So, that's great. I do think another thing that does help traders is to have a supplemental income on the side so they don't, not every trade is for their paycheck, but until you get to the point where this can be your job. Yeah, I mean, look, this is, Alex, you're new. Ron, you're not new, but I mean, Shen, you're new. Look, you go to college for 4 years to get a degree. If you want to be a doctor, which is a profession, you got to go for 8. If you want to be a professional basketball player, you got to, go practice every single day or whatever for 10, 12, 15, 18, 19, 20 years. Right? So this isn't something you're going to pick up in a month or a week or even a year. That's why at professional trading firms, a lot of the time, they'll make you go for 4 years before they give you like the big bucks, because they want you to see different market conditions. They want to see you go through a really good time and a really bad time in your trading career. They want to see you work through it. They want to see how you adapt to market changes, right? This isn't something, there is no better job in the world than this, but it's also something that you're going to have to put a lot of time into early on. Okay. I mean, I watched every video I could get my hands on. I journaled, I joined Discord rooms, I did all that for years, and it ended up paying off. And now I'm at the point where I'm teaching in a Discord room, right? So, I mean, it does pay off in the end, but if you have the mindset and you're going to quit early, and if you have the mindset of you're going to pick this up in a month or two, you're very, very much mistaken. Yeah, it's good, Chris. Yeah, Michelle, that's great. Yeah, it is the hardest way to make the easiest money. Or maybe it's, I don't know, maybe it's vice versa. I think you could argue for both sides, right? It's the easiest way to make the hardest money. But it's also extremely hard, uh, to learn this and get to the point where you can actually just click two buttons or just sit at a desk from your penthouse, whatever, and print money out of thin air. Yeah, it's pretty crazy. How old are the people you're teaching, Michelle? Because I know that if I'm teaching like uh, teenagers, it's extremely hard. But if they're just like your friends or whatever, then I don't know. I do think that there's a age aspect to this for sure. Oh, okay. Well, there you go. Maybe there's two sides to that argument. um, yeah, I'm still learning. Starting in fifth grade, and have lost so much money, but have really started in fifth grade. You started trading in fifth grade. That is insane. Like option trade inverse ETFs for a long time, and it was hard mode compared to options. Yeah, well, um, just keep working at it, man. It's gonna take time, but you're also maturing as a person in general, so you'll mature in the markets as well. Yeah, Duco, it seems a little more realistic to me. I definitely didn't have trading on my mind in fifth grade. I mean, you're in elementary school. It's just, I mean, how did you even know what the stock market was? Yeah. Were we still learning how multiplication worked? Yeah, I know. I know. I think he may be joking about fifth grade, but that's insane if that's true. Or, do you mean that your parents set you up a retirement account or something? What other question you guys have though? We got about 20 minutes left here. If you're mining ETH when you're in 5th grade, dude, then you must be doing well. That's awesome. Uh, sorry, I'm back. Let's see what else. One of my dad's friend helped me a bit with the coding part. That's cool. 2021. Wow. It's awesome. It's like mining, like mining crypto. Like for Bitcoin, aren't you solving the hashes or whatever, and it's how you create the coins term, I think. I don't know how Ethereum is different, but I know like for Bitcoin, there's an X amount of Bitcoins out there, and you have to. It's like a crazy math problem you have to solve. It's like I mean, computers have to do it, and that unlocks you a Bitcoin or whatever. Um, that's insane. I mean, 5th grade is just unbelievable. Yeah, Sigma. I know. I was playing army out in the woods in 5th grade. That's good. Yeah, that's cool though, man. I mean, you're gonna be way light years ahead of your friends, so that's great. Um, term. I can see you're kind of new here as well. If you have any trading questions, anyone listening, if you have trading questions, go for it, guys. This is for y'all. But again, I don't have prepared material for free lessons, so you're gonna get what you put into this. Yeah, sometimes it's kind of fun in here. I started rewatching Entourage. I think that's such a good show. I don't trade futures. No, I mean I trade SPY every now and then. I actually traded SPY today, late in the day. Just sitting here doing work, and I like the little setup we got. I look at it more like game. The more you do, learn, work, so you get better. Yeah, 100%. 100%. But if you mean futures, as in like the actual like raw futures, like NQ and ES contracts, no, I never do that. Didn't try to rub a gold. Nice, look at that. Where do you get your live news? So, Rollin, are you in my coaching? You're still not in a coaching group, dude. What's up with that? I'll send you a screenshot of the Twitter accounts I follow. I mean, obviously there's stuff that you can pay for, but you know the difference between the mentality of a retail trader versus a pro? What types of knowledge carries over? Yeah. Yeah, I know, Roland. It comes included. So, Chris, that's actually a really really great question. So, there's a couple of things that I think surprised me about being on more of like the at least seeing more of like the real professional institutional side of things. And one part is a lot of these guys they're very 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 systematic, right? There's guys that are really creative and they come up with these creative ideas and trades. But there's also guys that are very algorithm based, right? So there is a big spectrum of people. And I thought it was going to be kind of everyone's going to be fairly the same, and I think thought processes are the same. I think, like I said, just like trading processes in general. But one thing I was really surprised at is how much everyone interacts with each other. I thought a lot of the guys there would just kind of sit there, headphones on, trade, and just kind of hang out. But no, I mean, like, you're supposed to tell the guy next to you, I'm buying this here, my stop loss is here, my targets are here. There's a bunch of group meetings, you have a pod or it's kind of like a team of two, three, four guys, and y'all can make joint accounts together. So y'all can all trade, this basket of money together when everyone agrees on it and stuff. Yeah, I love industry. I've watched every trading show you could possibly, tell me about. So I love industry. That's more investment bank, but there is definitely still some trading on it. I like Rishi, or I think that's his name, Rishi. Anyways, I do, I don't know. Holding each other accountable is a huge thing. Working in teams is something that really surprised me. One thing that you didn't see there, guys, is you didn't see RSIs and MACDs and fair value gaps and Fibonacci lines and all that stuff. There's support resistance and there's prices and then there's thesis and there's like thought behind every trade. There is no indicators, right? Everyone using, people do, VWAP to me is honestly like the most VWAP and maybe some moving averages. No noise, right? It's like these guys know how price works. They understand how big institutional money is moving. And that's kind of their thinking. There is no trading views with all these indicators and algos that flip green with an arrow and tell you to buy and have a stop loss set. There is none of that. That's like kid BS. It's not real. It's not going to make you a ton of money. It's just not going to work. They focus on the process. They focus on quality trades. They focus on where is the big money coming in? What moves or big money players going to get involved in? I don't know. There's so much that goes into it. There's also a lot on the fundamental side that I was learning, and that's something that's why I would go back to the firm every summer, is to learn that side of things, right? I can talk support resistance, buy, sell, trend lines, whatever, all day, right? That's just how I trade most of the time. But learning things like spin-off trades, learning like seeing how analyst upgrades and downgrades work, how earnings are, involved in these kind of trades. And there is a lot more complex way that some of these guys trade. But, there's also guys that come in there and to make sure their algorithms are running and they're making $10 million a month and they don't care and they're doing whatever they want to do, and they're never in the office. So there is a full spectrum of people. Yeah, Roland, and also just understanding, like some of the head traders there, man. I mean, like the head of trading there, his name's Kenny Lysick. He was like Steve Cohen's right-hand man. And it was awesome getting to work and listen to him because he was involved in, moving billions of dollars around every day in a huge hedge fund called SAC Capital. You should look it up. Steve Cohen owns the New York Mets, and he was his best friend and business partner, and like they did it together. But that was who I like. Those are the kind of guys I'm like get surrounded by in an office like that. They're not looking at an opening range break. Okay, I mean that is like they understand the concept of that, but they're not buying 10 million shares of a stock, or 100,000 shares of a stock or whatever it is based on an opening range break, right? They're going to be, they're going to be buying it based on where they think institutional money would be coming in, where they think a big wave of investment money will come in. There is a side of it where they think and execute that way. But again, it's like I'm only there for like 6 weeks, so I try to soak up as much as I can. And I've only done that 3 times. So, I haven't really, it's stuff that I pick little bits and pieces of it out. But, if I could spend 6 months there, I would be able to talk about this stuff a little bit more in depth. It's just, there's just so much out there, guys. It's, I don't know. Yeah, I mean, I talk about the firm quite a bit. I talk to them every morning, just about, but I don't know. There's so many different traders in there, but they're all successful. So you can learn a lot from them. And that is what I want you guys to get out of a chat room like this, though, is you got to speak up. You got to talk. You got to get involved. You got to talk about what you think, and to have someone else contradict you or agree with you. You really, back to my point is like, that was the biggest thing that I got out of it, is really how much veteran traders are willing to work with younger traders, and how like the upper level guys want you to work as a team. They want you to work together, because like 5, really smart guys together is much better than 1. You don't know what you don't know. You can't see what you can't see. And, you could be so much better if you just work with people, I mean, in a fund like that, I'll never forget, one of the head guys is like, guys, if y'all would it's too quiet in here. If y'all would just talk to one another, think about if you can make an extra $2,000 a day, or if you can make an extra $1,000 a day, by just talking to someone, that's $250,000 a year that you can make with 250 trading days. And would you do it then? Would you talk to people then if you knew that if you knew that you could do that, right? So I mean, that's a botched story a little bit, but I think you guys get the gist. So don't be shy, right? You guys pay to be here. You guys pay to want to listen to us. We're here to help you. We want nothing more than to help you. Our job is to help you. So if you're not going to talk about things you struggle with, or you're not going to ask questions, no matter if you think that you look stupid or not, you don't. I can promise you that. This is a team effort. We want you guys to speak up. We want you guys to interact. We want you guys to get the most out of this. But it at the end of the day, it comes down to you. So you went to a firm in college while investing all this. So I would intern at the firm over summer times, my freshman, sophomore, and junior year summers. I'm a senior now. I had my last day of college class yesterday, Alex. So you will be here in no time, man. I can promise you that. And then, yeah, I work here. I love teaching, and it's also good to have like a supplemental income, like I just talked about. And it makes me better, right? Just like at the firm, I talk about they want older guys to work with younger guys and go through their processes because it helps them, right? It helps them go through the fundamentals, go through the basics of their trading. And then, obviously I make more trading than when I get paid here, but it's nice to have another extra check at the end of the month, The way retailers go about trading indicators, etc. Do you think from a retail position it would be an advantage to try and adopt a professional attitude? 100%, right? I mean, they're professionals for a reason, right? So, because it's not possible to replicate the conditions to people in a firm, right? And you're not going to get the experienced people around you, right? As like a normal retail trader, you're not going to get access to the information as fast as a professional firm would be. But you don't want to be the guy with indicators all over your screen, guys. You don't. As much as you may see a random YouTube video that tells you, well, if the MACD and the RSI cross in this Fibonacci retracement and the stochastic does that, then there's a 95% chance this is going to work. That's just not the case. Okay. It's just not. If it was that easy and that's what worked, that would be an algorithm and every freaking hedge fund in America would be trading that way. Okay. It's just not like that. So yeah, try to. I'm telling you right now, guys. I really feel that most of you guys don't do much homework at night. Just don't do much studying in general. But please just go and watch SMB Capital. That is the firm that I worked for. This is a real life trading firm, and I cannot believe they actually put the effort in to make some of these videos. They have videos of some of their top traders working. The prop firm. That's who I worked for. Their videos are Michelle knows. I know you've watched them. They are legit. They're legit. Yeah. So that's I'm telling you, like there's so much free content they give out and it's unbelievable. But it also is like recruiting, right? If they put this kind of content out, you can see what you can learn there. Please follow them. Try to watch one of their videos a day. I can't imagine they're more than 20 minutes long. If I'm still watching videos and working, guys, I would hope that y'all are too. But I want to go on remote. But do you think the experience of working on trading floor is worth it? I had an internship last year, and a guy who I interned with how they're going to work on a trade. Yes, I highly recommend doing it in person, Alex. Highly, highly, highly recommend that. Yeah, I know some guys who use the 9 EMA. Yeah, Alex. Well, whenever you get into college and stuff, then just hit me up and I'll get you an internship. I'm at their Texas office, but I'm planning to go visit their New York one fairly soon. I went to Texas A&M. I'm still here. I haven't even moved out yet because I finished yesterday. But yeah, Texas A&M. Well, guys, we're over an hour here, so I'll take any last minute questions, and I'm gonna wrap things up. But this is fun. I like getting to know you guys. Yeah, I mean, it's freaking awesome. They have a new one of a 22-year-old who's just my age, so he's literally done exactly what I've done. He's um Oh, sorry, Subi. SMCI dropped almost 20% today. What is the 3-day rule, and how do you know when to apply it versus buying now and it balance? I don't know what you're talking about 3-day rule. Are you talking about like the pattern day trader rule where you can only take 3-day trades in a week? Yeah, I haven't heard of a 3-day rule. But yeah, Alex. So like I've interned there for my freshman year of college, and there's a new one, a 22-year-old. He made 100 grand in a day. His first 6-figure day. Freaking insane though for 22. Texas A&M. Yeah, Chris, it was right. Thank you, dude. Yeah, Fulcrum. Yeah, Fulcrum makes a ton. No, I do not like school. I think I loved having fun and meeting people, and obviously moving out of the house and all that was cool. But I didn't get a whole lot out of my classes. Obviously, you're gonna get what you put in. I mean, I got a degree from a pretty top business school and all that, but at the end of the day, did I really, really, really take home a lot? Not probably not. I've also kind of know what I wanted to do in trading before I got to college, and I never stopped. So, oh yeah, fast to be. I don't know, but that sounds like a strategy, not like a rule. Um, I don't know. It's if that's a strategy that works for you, then go for it. I haven't heard of that, and I don't want to give you any wrong information, of course. So I don't know. Maybe it could work. Yeah, that's a good point, Sick man. I feel like I wish I looked around. I mean, I think A&M is a great school, but I feel like I did myself a disservice by not looking and exploring other options. It was just like I grew up. My dad went here. He played basketball here, and it was just like we're going A&M, and we go get out of college. And I applied, got into the business school, and I went. There was not even like a question. And I'm gonna make sure my kids look around at least 3 different schools, like at least, because I do regret not looking around. Now looking back, it's like those 4 years went quick. Once you got here, there was no looking back, and I wonder if I would have enjoyed somewhere else because I mean, even last week I got to go to a different college campus, and it was great.